what's up everyone, it's Levi here from Freedom Finance Academy. Today I'm going to be teaching you our trading strategy. This trading strategy has profited us the most out of every strategy we have tried, and we hope that you can learn something from this. Alright, let's get into it. Alright, so the focus of this video is going to be how we trade reversals. Reversals is when the direction of a price trend has changed from going up to going down or vice versa. We use 6 indicators as well. We use the Bollinger Bands, a 9-day EMA, 21-day EMA, TTM Wave, TTM Squeeze, and the RSI. Alright, so here's an example and a basic plan of how we use the Bollinger Bands. So when price action goes up, we and then extends outside of the Bollinger Band, we look for a put position, which means that we're betting the price is going to go down. So as you can see, it reverses from up and down, and we also do it from the bottom. So when the price goes down outside of the Bollinger Band, we look for a call position. Alright, let's take a look at a live example. Alright, so this is our setup for trading. As you can see, we have all those indicators that we mentioned earlier in the video listed, are really all on our chart right here. And so to add those studies, if anybody wants to know how to add these indicators, you're just going to go to studies, and click on studies, you're going to hit edit studies. And you can type in every indicator that we listed earlier, so if you want to go back in the video and go back over those, you can see which ones we typed out and which ones we use. And also you can see them right here. They're all listed right here under the strategies. We have a 1-minute chart on the right side, and we have a 5-minute chart on the left side. And so I usually trade scalps, which means I'm only in a position for a short amount of time. And so as you can see, as the stock price goes up, it extends outside of the Bollinger Band. As you can see right here, this would be an excellent position to enter a put trade, in which we actually did do this trade, and we took this trade, and it paid pretty well. So you want to enter a position when it goes outside of the Bollinger Band, and you want to wait until it tests resistance. So any resistance you see. Okay, quick side note here. I keep saying resistance. I meant to say support. So know that every time I say resistance in this little span of time, I mean support. You want to start closing out of your position. So you can enter in with a couple contracts up here, and you want to slowly start scaling out once it starts hitting resistance. So as you can see, right around this area would be resistance, because it's testing it and it's bouncing off this area right here. And as you can see, it later came down a little bit more, and it tested this area, and it pushed right back up. So we did not want to hold longer than this area right here. Okay, so as you can see, that's how we trade reversals on the Bollinger Bands. And as you can see down here, our TTM Wave, we use a TTM Wave as well. This the TTM Wave just confirms our trade. And so as you can see, the light blue tells us that the momentum is increasing, and as soon as it turns this yellow orange, that means the momentum is starting to decrease. And so you want to line up the Bollinger Bands, that where the position is outside of the Bollinger Band is you want to line it up with a TTM Wave. Okay, so the TTM Wave is just a shorter term momentum indicator. The TTM Squeeze is a longer term momentum indicator. And so they'll tell you the same thing, but the TTM Wave will be the first one to indicate a sign of reversal, and a sign of momentum switch. So as you can see, another example is going to be right here. We can see that the price started increasing. So right here would be a lot where you would say, okay, well, why didn't you enter a trade right here? And as you can see, you look down at the TTM Wave, and we can see momentum is still increasing quite significantly. And so we don't want to enter a trade if the momentum is going to keep increasing, because then we're going to enter against the trend. And as they always say, the trend is your friend. So you want to enter with the trend. Okay, so as you can see, we could have entered a trade right here. Momentum started switching at this exact spot. We can see that price action, sellers started coming in right here and selling this candle right here. All right, so we can see that they started selling that candle right there. Sellers came in, pushed it down. You can enter a trade right here, ride this all the way down to resistance. So you could have got out right here if you wanted to just let off like 1 or 2 contracts right here, and then keep the other ones remaining. And then when it gets down farther, you can let off more contracts wherever you see your profit and wherever you want to take profit. Okay. So now we'll go over an example of when it bounces off the bottom Bollinger Band. Okay. So we'll just go this one. All right. So here's an example of our strategy when it bounces off the bottom Bollinger Band. So as you can see, price action was coming down, and then it went outside of the Bollinger Band, it stretched outside. And as you can see, this is a good position to enter a long or call. So momentum is switching right here. You can look down and see momentum switching. Momentum is switching to positive. So, and then price action came down. We can see buyers bought up this candle, bought up this dip. So buyers bought in. You could enter right here and then ride it all the way up, ride it till support or resistance right here. So this would be a nice resistance right here. And then so you could load off a couple contracts there, and then take profit wherever you see fit. And then as you can see right here, it's immediately following, price extends outside of the Bollinger Band again, and we can see a strong reverse right here. So price action came straight back down and came all the way back down, As you can see, here's another reverse right here. So we can look down here. Price went outside the Bollinger Band, and price immediately started going up again. So right here, we could enter a trade right here. Let off some contracts right here, and the resistance right there, and it'd be perfect trade. So as you can see, this strategy is very useful in predicting reversals. So you always can't predict the market. Sometimes we enter too early or enter too late, and we get stopped out with a stop loss, or it goes against us. The trade goes against us where we enter too early and the losses are too high. So as an example, right here would be a perfect example. So you could anticipate a reversal, but if you were to enter early, you're going to get burnt on these contracts. Hello everyone, I just want to say thank you again for everyone who stayed this long and watched this video. I really appreciate you watching this, and hopefully this video can help you trade better or help you trade reversals a little bit better. So hopefully this provided value to you. Drop a like and a comment if it helped you in any way, and we'll really appreciate that. Thank you.